Are you a real estate investor or a real estate wholesaler? I want to share with you guys this week some mistakes that I've done myself in my real estate business, but also mistakes that I've seen through real estate wholesalers and also real estate investors. So guys, let's jump right into it. As a real estate investor, whether you're doing fix and flip, buy and hold, ground up construction, more than likely, you're not going to be obtaining properties through all cash. You're going to be using some type of form of financing. Some mistakes that I've made and some mistakes that I've seen are these. Making sure that you understand the full terms of your loan, understanding exactly what the loan entails. Does it have a prepayment penalty? Is it interest only? Is it a fixed rate? What do you need to put down? What do you need to have in reserves? Understanding all the terms and guidelines will, one, make your life a lot easier to where you can sleep better. Two, you'll be putting yourself a lot further ahead than most, just for the simple fact a lot of people do not pay attention to the details. And I have some individuals that I've experienced in the past that are having struggles now that have basically not paid attention to the terms of their loans. And now they're looking for either some type of forgiveness or they're wanting something to be wiped out. It puts us all in a bad position to where you cannot effectively run your business if you're not paying attention to your actual loan details. So guys, out of this, if you're getting, let's say, a DSCR loan, make sure when you actually get the loan estimate, you understand what the interest rate is. Is it fixed, adjustable? And what's the term of the interest rate? 10 years, 5 years, 15 years, 30 years? If it's fixed, what's the time frame, like I just said? And then the other piece of this is, what is your principal, interest, taxes, and insurance payment? Because they're going to want to know, you're going to want to know that because you ultimately want to cover your mortgage payment with the rent. So you're not losing money. And the other thing is, if you're in a DSCR and you're trying to get a property that has a DSCR ratio of 1.0, you're losing money because it's only going to cover that PITI. You have to pay for your property management. What about reserves for any type of maintenance that you would actually need? I always talk about a DSCR ratio of 1.25 or higher. It gives you 25% cushion to make sure that you have enough money cash flowing out of the actual property to where you're paying your property manager, you're putting away reserves. And oh, by the way, you're making a couple shekels for yourself. So please make sure you're not doing a deal that's at 1.0 or less. If it's less, if there's somebody telling you need to buy this deal, please come talk to me. I will make sure that we run through the numbers and understand exactly what it's going to cost you on a monthly basis. And if you're wanting to throw money at good money after bad, please don't. Wholesalers, you always talk about your cash buyers are king. 100% agree. 100% agree that your cash buyers are king. What happens when you can't get a cash buyer in the first 2 weeks? What are you going to do? You got to close in the next 2 weeks. For me to come in with only 2 weeks to go, one, you're very short on time. Two, you're putting me in a bad position to where your buyer has to qualify, get approved, get the actual appraisal done in time. It just doesn't work. Now, if you give yourself a roadmap of 3 to 5 days, maybe a week in the first week to be able to find a cash buyer and you can't find one and you want to stay consistent in closing deals, then you need to work with a loan officer, a broker that understands DSCR deals inside and out, whether it's DSCR, fix and flip, whatever it is. He or she has financing available for you that can move quick. And I say quick because most can't turn that quickly. The only downside to getting financing is appraisals. Appraisals right now are taking anywhere between 3 to 7 business days, which is really bad to begin with. And to be honest, sucks because we're waiting for it. But while we're waiting for that appraisal to come in, we're gathering all the documents from your buyer. We're getting all of their business entity docs. We're getting a couple bank statements from them. We have to pull their credit to make sure that they've got a good FICO score, get a copy of their driver's license front and back. And then we get all the title work and then insurance. Everything's packaged up while we're waiting for this appraisal to be completed. Once that's actually completed, we take the whole package and then we submit it to the lender. Typically, the lender will take 24 to 48 hours, business hours, to give us conditional approval. And if there's any conditions that come out of it, we start working on those. Usually 1 to 2 days to get those taken care of if the seller is getting us the documents that we need. Once we get those documents, we then resubmit it back to the underwriter, to the lender, to get clear to close. That'll take another 24 to 48 hours. So now we're into 2 weeks already. So we're a little over 2 weeks let's just call it 2 weeks. As soon as that comes out clear to close, typical lenders will allow us to close within 24 to 48 hours. So after everything's said and done, 10 to 12 days, let's call it 13 days on the outside, you'll have the file done, completed, closed, and you get paid. And let's talk about the most important thing in this deal, your assignment fee. Your assignment fee could be added to the back-end purchase agreement. You have your front end where you've signed with the seller, and now you've assigned your purchase contract to the actual end buyer. Some lenders will allow you to charge up to a certain percentage. Some will allow you to charge up to a certain dollar amount. Work with your broker, work with your lender to understand what you can and can't do. Number one here, make sure that your assignment fee before this thing closes is on your ALTA, your closing disclosure. It will break it out in a subsection that says ABC Wholesale, $5,000. Make sure that you are getting paid and you're covered. 2, work with the title company and figure out how you're going to get paid. Is the title company going to send you a check? Are they going to wire the funds? Are they going to overnight it? Whatever the case is, work with the title company, the title agent, and make sure that you have everything in place. Number 3, working with a loan officer broker that understands what you're trying to do, bringing him or her into the process earlier rather than later is the best thing you can possibly do, because you've gone from a very small sliver of the universe to where you're going cash buyers to where now you've opened up the whole universe with investors that can qualify for financing. Are these cash buyers going to be able to pull the trigger quicker than a finance deal? Yes, I get that. But I also can tell you right when I speak to an end buyer that's looking for financing, I can understand if he or she's going to be able to close. And I'll tell you right up front whether they're going to close or not. Lastly, guys, whether you're a real estate investor or you're a real estate wholesaler, always make sure you're looking at the terms of your loans, making sure that you understand what is written on paper in black and white, making sure you understand if there's a prepayment penalty, if it's interest only that you're making payments on. What is your PITI if you're getting a full interest and principal payment? What's the term of your loan? Who's personally guaranteeing the loan? God forbid if something happens, the loan needs to be repaid back and your property is not cash flowing. Who's on the hook for it? Those are all the key important items that you need to be asking yourself before you can't be successful in the financing space of DSCR, fix and flip, bridge loans if you don't understand the terms that you're signing up for. Because ultimately, the lender is going to hold you accountable because they had you sign the documents. They gave you all the information up front to review and sign. But if you didn't pay attention to it, shame on you. And there are people that unfortunately I've worked with that have had this trouble. And I always tell them, take a look at the term sheet, ask questions, make sure you know what you're getting into. Otherwise, it's a complete failure on my part and your part. So guys, that's what I wanted to share this week. Stay healthy, stay safe, and I'll see you guys on the other side.